Hey, good morning, everybody. Hey, welcome to Tuesday. We're approaching the halfway point through the month of May. Yesterday was quite the bloodbath, and I'm sure that Dave and I will talk to you momentarily. But I do want to remind you again of our free report when it comes to retirement strategies. You know, given some of the volatility we're seeing within the marketplace now, I think it's really important that folks have some strategies in place, especially if they're already retired or they're getting close to retirement. And what is close? You know, the next 5 to 10 years based on the past 20 years of stock market history. And so we've put together this free report on retirement strategies. All you have to do to get your report is text the word retirement to 863-285-3815. It's that easy. You can do it anytime, day or night. Just text the word retirement to 863-285-3815. Hey, I'm looking forward to what's happening today in the marketplace. Dave we'll get started in just a moment.
White FM, good morning. How do? I'm glad you're here today. It's 8:38, 22 here before 9. Well, you'd have to be a real Pollyanna to say you had a good day yesterday if you were invested in the stock market, because it kind of was El Stinko. Let's see if we can keep it going and maybe improve things a little bit this morning. Phillip Statler is in his office at the offices of Statler Financial Services in downtown Sebring. Well, how do you put lipstick on this pig, Phillip? Down 617 points on the Dow yesterday.
You know, it was definitely, can you say, a rough day yesterday and a rough way to start the week. And it's, you know, it's actually, if you look at, you know, the week, the last basically 5 days, we're down 4%, a little over 4% on the Dow. You know, they look at the last 12 months, that puts us down to less than a 2% growth on the Dow. So obviously yesterday was not a good day. We are getting a little bit of green today to try to pick it up a little bit.
A little bit of dead cat bounce, for lack of a better term, even if one is a cynic. I was looking through about the only two places anybody could have made any money yesterday was if they were invested in the VIX index, the volatility index, or if they were really nuts and had money into Bitcoin, because that was about the only two places anybody made any money, at least domestically.
Well, yeah, it's kind of interesting because Bitcoin's kind of raised its head again and said, "Hey, look at me, look at me." They're actually up 120% since January 1st.
Well, when you got no place else to go, sometimes the frittering money goes to the high-risk investments. And folks that took a flyer on Bitcoin about a month and a half ago, 2 months ago, are probably kind of happy at the moment.
Yeah, I think so. I mean, I think it had bottomed out pretty bad, actually, when you think about it. It had gotten down to, I think, around 4,000, maybe even a little less than 4,000. Now we're back up over 8,000. So yeah, so it definitely had some momentum to go there.
It's kind of at the point, you know, when things get as hinky as they get, investors with a little bit of money to put at risk are sitting and saying, well, I might as well take a flyer on this because the stock market isn't my friend for the moment.
Well, and that's true, and it definitely hasn't been our friend for really. If you look at it, I mean, a lot of last week, right? We had a lot of downward pressure too, except for kind of Friday.
Yeah, that's true. Actually, we're going around world markets. I'll pat myself on the back for one thing. We were talking about the tariffs and the effect of them, and some of the press coverage that have been happening. And I'd advanced the notion the other day that, yeah, we're going to pay some more for Chinese imported goods, or we're going to put 100% of the bill. No, we don't know how much of the difference in price China is going to be willing to eat in order to maintain market share. One market that is likely to benefit from us having a trade war with China is South Korea. And evidently their investors over there kind of agreed, because they were about the only market that was up yesterday, because we threw a hex on just about every market on earth yesterday during the day.
Yeah, we did. I find this tweet or this breaking news kind of interesting that just came across my tape. It says Trump says if the Fed cuts interest rates, the U.S. will win the trade war.
Based upon what the Fed governors we were seeing tweet from they are the case. Not gonna happen,
Not
right?
gonna happen. Not gonna happen. So yeah. So, but it is kind of interesting to say that this trade war, had kind of died off. I mean, we were all hopeful that something would take place by now. There kept being a deadline, and then a new deadline, and another deadline. And I think from a couple articles I've read that Trump basically says the only way to get through to China is to bully, and so and let's face it, he's pretty good at bullying. So let's see what happens. And he says they've got a heck of a lot more to lose than we do because of the amount of imports. We import from them a lot more than what they import from us. It doesn't mean that it won't be painful though, because our agriculture is one of the top things that's on the target list for them.
And China basically said in so many words, well, we might just stop buying any agricultural product out of the United States, which threw the Midwestern agricultural futures markets into an absolute tizzy yesterday. But taken on a full picture macro basis, I'm no fan of tariffs as a general tool for negotiations. But that having been said, it is true that we're more capable of wrecking Chinese markets than they are of wrecking ours. They can cause pain, but in terms of doing terminal damage, we can cause more trouble for them than they can for us if it gets down to a full-blown trade war.
Well, that's true. I think that is so true. Hey, the other thing that came across my ticker this morning when I got was a drone attack on the oil fields in I think it's Saudi Arabia. Not necessarily oil fields, but they knocked out two of their transition stations in their pipelines.
And there were a couple tankers that got attacked as well by sabotage over the last 48 hours. We don't know where it comes from, but it's not a good sign for the price of oil, is it?
No, but I find it interesting. It's still lower than what it was yesterday when you and I talked.
Huh. Sometimes you just can't explain why junk goes on, can you?
Yeah, you just can't sometimes. So
the only macro bit of news we got out of our government today is probably completely a non sequitur given what's happened since the 1st of May. Our import prices were up by about 0.2% during the month of April, and only 0.1% once you exclude fuel. Actually went down by a little bit once you excluded fuel. All of that is about the most meaningless information you can ask for, given what we've done to imports over the last 36 to 48 hours, but had to throw it out for the sake of notation and let the world know that we know. A few companies were reporting as we bring down the end of earnings season, and one or two of them might be names folks have heard of, Phillip.
yeah, then maybe, maybe not. One of them is Take-Two Interactive. I think probably the gaming guys will probably know that one because they're kind of that's what their industry is. They came in on earnings per share and beat by 3 cents a share. They did miss on revenue though. The company gave weaker than expected an outlook as they continue to face some competition in some of their games. And so they're trading down just a little bit, about 0.7% this morning. The other one that people aren't going to recognize, but it's an industry that I think is a growing industry and is an important industry, and it's called CyberArk Software. And they deal with it's not really consumer. It doesn't at least look like consumer related products. It's more big company. Their list is they had a lot of Fortune 500 companies that do business with them, but that obviously they're a cybersecurity software company. They beat by 15 cents a share. Revenue beat forecast, and they said they had a record cash flow during the quarter, better than expected. Full year guidance. They're trading up almost 6% this morning.
Glad to see some good news. Yeah, the only name that I recognized right off the bat, and I don't have the actual number. I know Ralph Lauren kicked butt as far as their quarterly report.
I did drill down, and it just wasn't on my main tip sheet. They came in and beat on earnings per share, and I think they beat by a little bit on revenue. At least year over year, they were better. Their EPS was pretty good. They were expected to come in at 89 cents. They came in at $1.07, so they did well there. Their North American revenue was down 7% though. But they're about even right now. They were up as much as 2% early today, but now it's about 0.2% is all they're up.
Okay, all I heard was big beat, and it doesn't sound like as big as the tip sheet had it. Setting the table for the morning, yesterday was, like we said, a bloodbath. Dow was out by 617 points. That was over 2.33%. Standard & Poor's was down by the better part of 2.5% at 69.5 down. And NASDAQ, I think I said yesterday morning, always wants to be on top of the heap, so they beat everybody, down 3.5%, down 269 points yesterday. It was just generally an El Stinko day on Wall Street. There's always some sort of a bounce after a day like that. Phillip, what's it look like 45 minutes early?
Well, right now, Dave, we're going to get a bounce, but not near the bounce we were going to get first thing this morning when I looked. It is starting to slide down a little bit, but we're still looking at the Dow up over 100 points, 106, which is about 0.4%. The S&P 500 up 16, which is about 0.6%. NASDAQ up 55, which is about 0.75%. We've got gold giving back a little bit this morning, down about 0.1% to $1,300 an ounce, and we got silver at $14.82 an ounce, and crude oil is up about 1% to 61.61 a barrel.
And that's, I think, a little lower than it was yesterday morning at this time. So net, we're actually down from yesterday.
Yeah, I think so, Dave. I think we are down a little bit.
Can't even explain that. Worldwide, the Asian markets are still tanking. Europe's getting a little bit of the same kind of bounce we had after falling like a rock yesterday. They're bouncing back a little bit. 10-year Treasury bonds we always watch just because, well, it tends to be an impact as to where the money's going when it's going out of our stock market. It's down by 5 more basis points this morning, down to 2.41%, which means your savings bonds ain't going nowhere anywhere fast as well. Phillip, you want to find out how to stabilize a person's retirement fund? Going to an advisor without a vested interest in any particular product makes real good sense. You're it. How do I find you on the phone?
It does. It's more and more important today that you deal with somebody that is independent, has a fiduciary responsibility to their clients, not just a suitability responsibility. So that's us here at Statler Financial. They can reach us via phone at 382-0037. Give us a call, schedule an x-ray report where we can see how much risk you have in your portfolio and make sure that it's in alignment with your current risk. Hey, like our page on Facebook and keep up with us there, Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 7:30 a.m.
And streaming now for your shopping convenience as well. Phillip, thank you so much. Let's cross our fingers we can talk green tomorrow morning. Fair enough?
All right, sounds good, buddy. You have a great day.
You too, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop it. Hey, I want to thank you for joining us today and remind you again about our free report when it comes to developing a retirement strategy for you in retirement. All you have to do to get your free report is text the word retirement to 863-285-3815. That's simple. Text the word retirement to 863-285-3815. Again, thanks for joining us today. I look forward to speaking with you again tomorrow.